Hi, everybody. Joe Cassano, audit partner here at Withum, head of national markets for financial services. I'm joined by John D'Agostino, head of strategy for Coinbase Institutional. Thanks for joining us, John.
Thanks so much for having me, Joe.
So the topic we're going to dive into is the digital asset reset, where we stand, and what comes next. Let's start with the state of the digital assets in total, pre-October 10th and post-October 10th. Kind of what happened and where do we stand now?
So the timing on this is pretty interesting, right? So you and I talked about doing this pre-October 10th. So we talked about doing this during close and around to all-time highs. Um, we had a incredibly positive series of regulatory changes. Obviously, what's happening with the administration, the OCC, the SEC, the CFTC. Even with some of the confusion around who would lead those agencies, the net results were extraordinarily positive. We had clarifying language coming out of the IRS. We had a seemingly endless deluge of institutional participants, JP Morgan, Citibank, both announcing blockchain utilization as a core thesis. Harvard University announcing it holds more IBIT than gold, et cetera, et cetera. Recently, the Czechoslovakian National Bank came out and will be the first Eurozone national bank to purchase Bitcoin for the national treasury. So all of these amazing things were happening. Crypto was trading at all-time highs. And then October 10th happened, which was largely considered to be a liquidity crisis. And when I say short-term liquidity crisis, I mean, we're talking about like 30 to 45 minutes. I mean, that's the factor here. Um, and then we've seen this slow and steady decline and increasingly demoralized digital asset world since the 10th. So that's where we are. Where we are is we had an absolute liquidity crisis caused by the things that usually cause liquidity crises on October 10th. Over leverage, um, uh, excessively long positions, et cetera, et cetera. And then the debate's on as to what's happening now. I was under the impression that this was less of a liquidity crisis and more of just a typical mean reversion to an extraordinary 12 to 18 months of growth. I've gotten some information recently that makes me think that perhaps I'm underestimating the extent of October 10th and the extent of that liquidity crisis. And while the first thing, every time we have a big gap down, whether it's commodities, any type of derivatives or crypto, my phone blows up and everyone starts saying, well, who blew up? Who blew up? There has to be somebody blew up. Some massive hedge fund blew up or some big market. That's always the boogeyman out there. It's rarely that. Sometimes it's just, sometimes a cigar is just a cigar. Sometimes the market got overheated. It corrected. People got nervous about that correction. It exacerbated the correction. We all know there's like 5 prop shops in Chicago that control a tremendous amount of liquidity in almost every asset. All their algos are written by the same 100 people, and everybody goes to one, and things get really, really, really bad, much worse than you want, and then they stabilize and start moving up again. I've gotten some information just as recently as today that makes me think, well, I'm right that there were no massive blowups. I think the damage of October 10th was a bit more acute. And I've heard now some substantiated rumors that some of the market makers are poking around to shore up their balance sheet. They're raising capital. So, not this sort of urgent sky is falling, we're going bankrupt tomorrow, they're going to lock the doors and the bankruptcy trustees are coming in. Not that type that I used to see in commodities every 10 years or so, and that we saw, I think, post FTX and post Genesis and others blowing up. But it was bad. It was bad enough that I think everybody sort of got really, really scared. I think some market makers came closer than I thought. And that kind of explains this sort of liquidity funk we've been seeing for the last couple of weeks. Um, I think we're getting close to the end because everybody's upset, everybody's sad. That tends to be like the full capitulation. Like there are no bulls left. Like everybody's miserable. It's all going to zero. Oh yeah, I'm starting to get calls from questions from journalists. I did an interview yesterday, and the journalist was like, "Can it go to zero?" And I haven't heard that in like 5 years.
Yeah.
So that to me is a good sign that we're getting close to the bottom. But yeah, things can't go up. Things can't double every 6 months forever. Like mathematically, like they'll be larger than the global economy in 10 years. Um, so I think the pain's out, the big pain's out. And hopefully we'll see a nice little, recovery by the end of the year. Doesn't look like we'll hit all-time highs again. Who knows? But that would break the 4-year kind of traditional cycle that Bitcoin moves in. But that's okay. If it's going to mature as an asset, those cycles have to change at some point. It can't be that predictable in perpetuity. So sorry, long-winded way of saying I think um, we are where we've been multiple times, which is panic mode. Um, Joe, I don't panic not because I'm a sociopath, but because I grew up in the commodities world where these types of things happened all the time. And so if you panicked all the time, you would just have a miserable life. So you learn not to panic.
No, I definitely agree. And to take a somewhere in the realm of $19 billion hit, and talking about it's coming back, it's definitely a good recovery. It'll definitely recover. I think we're not going to hockey stick up, but I think you're right. I think we're kind of close to the bottom, and it's definitely on the upward. We'll get better.
Look, it's
Um,
still above a $2 trillion asset class. Um,
exactly.
the equities market's correct on that amount all the time.
Yeah.
so it's like I don't want to be flippant about it, because if you came in at the high, if you were over levered, um, I take no joy. There's no Schadenfreude, and people say, oh, the leverage got wiped out. Well, those are human beings, right? Those are people, and you can call what they were doing reckless, but at the end of the day, they were doing that with their money. They were maybe they were trying to better themselves. I don't know
Mhm.
that. I don't judge. So I try not to be flippant about it. But the reality is, nothing is different now fundamentally from 3 months ago, right? I don't see anything fundamentally structurally different than 3 months ago. And every time I can say that about an asset class, I like to dollar cost average into the mean reversions. That's done. I've been around the smartest investors in the world, and all of them taught me don't try to market time. And
Yeah.
if they can't market time with all of their resources and all of their experience, all their access to research, what chance in hell do I have to market time? So if you, as I said this on Squawk Box the other day, we like apples in our house. We don't like them less because they're on sale.
True.
I'm not
Very
saying
true.
we like them more. I'm not saying when they're on sale, you go and buy a million apples. But if we eat 10 apples a week in our house and we walk into the grocery store and they're 25% off, we don't say, oh, maybe we don't want 10 apples this week. We buy our 10 apples and we're happy to buy our 10 apples. So, I think that's sound advice. And I think 6 months from now, we'll be looking back and saying, probably should have bought some apples.
I definitely agree with you there. Switching gears a little bit, talk a little bit about digital asset treasury companies. It's been a
Yeah, talk about
hot
depressing.
conversation, at least the last 6 months. I've been in quite a few of them. Want to get your thoughts on it. Is it a fad? Kind of, where do you see it going?
Yeah. So I don't think it's a fad. Certainly there was a bubble. There's no question, but I don't say that pejoratively. I don't think bubbles are necessarily bad. Um, Bubbles are when people get really excited about an idea and they all rush in to that idea. Um, it doesn't necessarily connote, I don't view it as being a negative thing. And what's interesting now is what's happening to the DATs now is what everyone has been saying would happen to the DATs. Like every single person I know, even the most bullish individuals on DATs, and I am bullish on them. I think they're a wonderful mechanism for accessing an asset class that will exist over a long period of time. But even the most bullish people on that said, "Hey, we're going to have a consolidation, right? You can't have like 500 around each token. They're going to consolidate. A lot are going to fail. The higher quality ones will scoop up the lower quality ones. The MNAVs are going to compress. Everyone's been saying that, right? Michael Saylor and strategy aside, he's the goat. He's a unicorn. He's unique, right? For everyone else, and I'm on the board of a DAT. Everyone was saying this. It happened, and now there's this panic around DATs as well. But I'm like, wait, you said this was going to happen. Now again, it happened, I think, in a more truncated, violent format, and that doesn't make people feel good, right? But this is playing out. Everything. So it's funny. Everything in crypto, it seems to be somewhat predictable, it plays out kind of the way TradFi trends played out. It just plays out much faster. Everything in crypto happens just much, much faster. 5-year cycles happen in 6 months. 3-year cycles happen in 1 month. Year cycles happen in minutes. But I don't understand the consternation around DATs because we're just seeing the consolidation that everybody said would happen.
Yeah.
Now, I feel sympathy for some of these DATs because I think a lot of these management companies and boards aren't very experienced at public company governance. And so they're in a situation now where, like, wow, we just launched 6 months ago, a year ago, 2 months ago, and our timing was awful, and now we're way underwater. And what do we do? And I know there's bunches other DATs who are better capitalized are calling around and saying, hey, we should consolidate. We'll buy you at this value. And if I'm on that board of directors of that acquisition target, I'm like, wait a second, am I going to do this? Am I going to get sued? It's scary. It's very scary. So I don't know if the consolidation is going to be as rapid as people think.
Mhm.
I think these boards are going to take time. I think the management company are going to talk to their lawyers. The lawyers are going to say, hey, there's a process you have to go through. You can't just hit the first bid, especially if it's under NAV.
Mhm.
But eventually there is a process for this, and eventually the lawyers will guide the boards through the process. And if the right thing to do is to sell below MNAV, then they will do that because that's the best thing for their investors because these companies have operating costs. And if it's below MNAV now, it's not going to be, you can kind of hope that the assets increase over time, but that's not a strategy. Hope is not a strategy. So maybe this okay. We're going to earn our way out because we're better at earning yield than everybody else. Perhaps maybe we're going to cut operating costs. Maybe we're going to try to figure out financing and buy a cash flow generating business. All of those are viable options. But if you don't have that option set and you're a board and an offer comes through that is maybe not what you like, but is better than realistically where you'll be as a company a year from now, you have a fiduciary obligation to seriously consider it. So I
Yeah.
think those things take at least a few quarters, maybe 2 or 3. So I don't know if we'll see massive consolidation before like Q2, Q3. But again, everything in crypto happens faster. I could be wrong. It could happen sooner. But again, this is exactly what everyone predicted
Yeah.
for DATs. It's just happening fast and in an uncomfortably fast way.
No, that makes perfect sense. Is there any benefit to go into a DAT versus an ETF in digital assets for that type of exposure?
Look, it's different strokes for different folks, right? I don't. The simplistic argument, I think, buy the ETF because it's the cheapest, fastest vehicle. That makes sense, right? You can say that for investing in stocks as well, right? Why would anyone try to compete on individual stock picking? Just buy the Vanguard and S&P and go to sleep. And I think for a lot of people, that's fair. That's the right answer. But there are people who invest in hedge funds. Hedge funds are a $4 trillion asset class. There are people who invest in mutual funds. There are people who invest in ETFs. There are people who pick individual stocks. There are people who hire money managers. So again, who am I to tell people how to optimize their market experience? And if I think somebody said this. I didn't make this up, but I think it's brilliant. I think it was Tom Lee actually. I think he said Berkshire Hathaway is a stock asset treasury firm. Berkshire Hathaway, sorry, my daughter's calling right. Let me turn off my phone. Berkshire Hathaway is, they own a bunch of public stocks. You can go buy those stocks.
Mm-hmm.
But for 40 or 50 years, we've been trusting Warren Buffett to be better at being a long only mutual fund, more or less. And he's earned a premium threat. And by the way, they're not the only ones. There's a dozen or so lookalikes. And so this notion that you could have a certain number of companies who just manage these publicly available assets better than everyone else in the world is not a crazy idea. But again, it's not going to be, there's not 1,000 Berkshire Hathaways.
Yeah.
There's not 500. But could there be a couple of dozen around the world? Without question. Let's give these firms a chance to figure out what their nuance and value proposition is. But the arguments against DATs, if you follow them to the logical conclusion, we wouldn't have anything besides to the top 10 performing ETFs, maybe a couple of mutual funds, like literally a couple, and that's it. And muni and fixed income. That would be the entire U.S. capital market. So So I get it intellectually and academically, but that's not how people invest.
No, that's a great point. And the analogy to Warren Buffett, never thought of it that way, but that's spot on.
That's Tom Lee. I was angry when I heard it because it was so smart, and I was like, I wish I would have thought of that. But he's right. He's absolutely right.
Yeah, no, it definitely is. There's been a lot of interest around tokenization and tokenizing funds, tokenizing instruments in funds, tokenization of real assets.
Yeah,
What are your thoughts on that? Positives, negatives?
it, it's like taxes and death. It's just going to happen.
Yeah.
And a lot of it's going to be not good stuff because a lot of stuff that's securitized is not good stuff. It's like YouTube decreased the friction associated with producing video content, and that's wonderful, right? We all love YouTube. The majority of stuff on YouTube sucks. It's awful, right? But that's okay. A lot of equities are awful. A lot of fixed income instruments are awful. Tokenization is just a platform. When I started at the NYMEX, it was open outcry. And everyone was really, really confident that open outcry would last forever because it worked really well, Joe. We traded $1 trillion notional of crude oil exposure with a bunch of kids flinging cards at each other. And this isn't 1910. This is like 2004. This is like, it was crazy. We had, supercomputers and we still did it that way because it worked really well. And everyone's like, why would you change it? And then, because no one could imagine how much bigger and faster it could be by going digital. And then we digitized the commodities markets, and everyone's like, oh, yeah, this is obviously the right solution. And now you look at tokenization and you look at the speed and the simplicity and transparency and security. And you're like, oh, yeah, of course I want to settle almost instantly versus T+2. Of course I want to have a digital instrument that is programmable so you could write in rules and do cool stuff there. Like, obviously that's better. We're not going to use the open outcry system from 100 years ago, 25 years ago, and we're probably not going to use the system that was 25 to 50 years old in 50 years from now. So definitely, it's clearly better. It's like the day I sent my first email, Williams College, 1993. No, sorry, 1997. And clunky server, didn't go where it was supposed to go all the time. But the moment I clicked send, I was like, oh yeah, this is way better than mailing things. Like, obviously we're going to do this someday. It's like that with tokenization. Like Larry Fink, I don't know if Larry Fink said everything's going to be tokenized. The follow-up question would be, Larry, is everything going to be tokenized in our lifetime? And maybe the answer is no. I don't know. But clearly my 8-year-old daughter is going to transact using stable coins and tokenization because it's just a better way to transact. The timeline, I have no idea. I rode in my first driverless car in San Francisco recently. I'm late to the party. And as soon as I got out, I was like, yeah, that's obviously the future. Like, there's no way that's not going to be, maybe it won't replace all human drivers, but like clearly that's a lot better than the system we have now. So tokenization is going to happen. A lot of stuff will be crap. A lot of stuff will be just, especially the early adopters. Like, a lot of it's going to be people using it as a marketing gimmick. But over time, slowly, the higher quality product is going to go on, and they'll be the last to go on because they can afford to be the last, right? They don't have a problem raising money now because they're the high quality product, right? So they're going to wait until their investors are banging on the door saying, "Hey, man, I love you, but if you don't do this via tokenization next time, I'm going to move money somewhere else." But they're going to wait as long as they possibly can because why would they be the innovator on that? Makes no sense for them.
Yeah, I definitely agree. I think it's the way of the future. Like you said, when, who knows? But tokenization, the ease to access. Question is where the secondary markets pop up, AML, KYC, around that type of stuff. But yeah, as far as tokenization itself,
that'll be fine. We'll solve that problem because we go to jail if we don't. Right, I'm not worried about the AML KYC. We'll solve that problem. People don't want to go to jail, right? It'll just come down to like, someone like an Elon Musk or somebody has to have the courage to be like, all right, I'm listing my next company, and the only way you have access to it is in tokenized format. That's it. There's no side by side, no nonsense. I'm reminded the Nasdaq is the Nasdaq because they had the courage to list Microsoft when no one thought that public tech companies were worth anything, right? And everyone said, well, if we want Microsoft, we got to go to Nasdaq. right? There was no other option, right? So I think that has to happen at some point. Someone just has to say, this is it. You don't have an option. It's not, we're tokenizing 10% of our fund. I mean, look, what Apollo and KKR, that's awesome what they're doing. What Galaxy, it's great. They're testing out the plumbing, getting people comfortable. But at some point, someone who everybody wants to buy has to say, this is it, man. Do it or not.
Yeah, that's definitely a great point. Um, so, what do you think the industry needs to know or should be thinking about for the near term future?
Um, let's handle. We got to get better. We got to get better as an industry, crypto as at not panicking during these volatile periods. Because look, this is. I do think mathematically the top tokens like Bitcoin will get less volatile just by definition. There's more capital that flows in, the more diversity of depth and breadth of market, you get a little bit less volatile. But it may be like crude oil, right? Crude oil went negative 2 years ago. Negative. You had to pay someone to take delivery of the world's most important commodity. I can't believe people like just forgot about that. Like it's amazing to me. Like so there are certain assets that just might never not. There might always be latent volatility, and that might be the case for Bitcoin. Um, so we got to get used to this, and so we have to get better at not panicking and getting depressed and showing weakness. I think during the downturns or the mean reversions, and then we have to get more elegant in how we discuss our asset class during the bullish periods, and not get over our ski tips, and maybe not encourage people entering the market for the first time to go all in, especially at all-time highs. And I don't know anyone who actually did that, but there's a general zeitgeist of kind of over irrational exuberance and irrational pessimism. Right now, we're in an irrationally pessimistic phase. But when things are good, maybe instead of saying mortgage your home to buy Bitcoin, we say things like dollar cost average in within a reasonable part of your portfolio. Like I think we win more friends over time that way.
No, that definitely makes sense. And everyone's in the industry is talking about, you should have at least 2 to 3 to 5% exposure to digital assets. So it definitely makes sense. Why mortgage your house? Let's
And
take
get it
last.
over time. Like
Yes.
there's no rush. Like get it. I'm a big fan of everyone who comes to me for advice. I try not to give financial advice, but I'm like, whatever it is you want to buy, how much money you're going to buy into that asset class, whatever asset class it is. Um, uh, over 6 months, divide it by 24, and buy every week in equal increments. And don't even look at the price when you're buying in. Don't get fearful or excited. Don't get greedy or fearful. You just never go wrong really with that. So people miss some of the tops. Okay, they're also missing some of the bottoms.
No, absolutely. That definitely makes sense. Um, last couple of minutes here. One last question. Where do you think TradFi is still missing the mark on digital
Yeah,
assets?
I think let me answer this in two ways. One is I think we in dealing with TradFi, again, I always try to start with where am I at fault, right? So where am I as the seller of this concept to TradFi? Where are we to blame? Where am I to blame? Um, you know, Sometimes people just don't like the thing you're selling, and that doesn't mean they're dumb. That doesn't mean they're a luddite. That doesn't mean they're a technophobe. That means not everyone invests in everything. And if you're walking into the room of a equity long short hedge fund manager, trying to sell them on this idea of digital assets or Bitcoin, and they go, "Oh, that sounds interesting, but that's not what I do. I invest in equity long short." That's okay. So I think the first step is like not all TradFi is going to buy into this asset class, just like they're not all going to buy. They're going to use it in some way because blockchain will be an infrastructure layer, and they should learn about it. But not everybody likes the apples I like.
Mhm.
That being said, I think where TradFi does get it wrong is their view of the infrastructure layer, the market structure, the custody, the security, the prime brokerage, all the pieces. Their view is archaic. Their view is 10 years old. So they're still kind of scared. It's one thing if you just say like I don't invest in that or I don't like the thesis. Fair enough, that's fine. But the I don't want to invest in that because it's risky or dangerous. But I also own real assets or physical commodities or commodity derivatives or all these other things that are, just as again, it's not like large cap U.S. equities or munis, But if you're comfortable owning things outside of that, you should be comfortable owning crypto because the infrastructure layer is there. You can custody it safe with qualified custodians. There's prime brokerage, there's lending, there's banks, there's administrators, auditors. Like 7 years ago, 10 years ago, yeah, it was challenging. If you're a registered hedge fund, you had to be a little bold, I think, to do this. Now it's if you can buy a commodity future, you can own spot Bitcoin. You can buy exposure to Bitcoin futures, and obviously there's the ETFs. But owning spot crypto is no longer scary. That's the one place I think TradFi is a little bit getting it wrong there.
No, that makes perfect sense. Looks like we're just out of time. John, I'd like to thank you for your insights. I really appreciate you joining me here today.
I'm a big fan of you guys, huge Withum fan. Anytime you need me, I'm here.
Thanks, John.
Cheers. Bye bye.
Bye.